still have a very unpopular opinion that apartment style condos are a terrible long-term investment here in Calgary. But with our real estate market getting less and less affordable by the day, majority of buyers don't have any other options. Buyers are struggling with affordability, and it's been getting harder and harder for first-time home buyers. The dream of a detached home with a white picket fence, your dog playing out in front, is turning more into an apartment with a balcony and a cat. That's right, you're now a cat guy. That's what these high interest rates have done to you. This is a graph that goes over 19 years of sale price history in Calgary for apartments. As of today, we're barely over the 2007 highs, and we're still under the highs that we saw in 2014 and 2016.
You're just creating FOMO in the market. The market isn't doing that well and has to slow down soon.
Let's have a look at the data and see if you feel the same way, random YouTube viewer. No matter what real estate market you're looking at in the world, when you're seeing an accelerating market, the least expensive homes will get purchased first and their appreciation percentage will be the highest. And that's why we're seeing the average apartment price up almost 16% year over year. These are the big factors driving our apartment prices up. Last year, our province gained over 200,000 residents. That's the largest annual increase in Alberta's history and equals about 550 people moving to the province every single day. We have seen population spikes like this in the past, especially in the mid to late 2000s when our oil and gas sector was at its strongest. But this time it's different. This time the big reason people are moving to Alberta is affordability. Toronto is now less affordable than New York City and Miami. The average Toronto and Vancouver condo sells for over $700,000, while in Calgary, we're only at $312,000. So on average, we're 60% less for a similar condo. Affordability and higher rates are pushing Canadians to move to Alberta. The part that I always get worried about, especially in a hotter market, is buyers are getting desperate. When buyers are getting desperate, they make poor long-term decisions, and real estate is a long-term decision. I've brought this example up in the past. We represented the seller on this transaction back in 2019. This unit sold recently and they lost over 12% of the value, and that's not including the special assessment that was paid, and the condo fees were up over $200 a month. Meanwhile, the rest of the market has appreciated over 30%. Just because the market is hot, it doesn't mean that all condos are up. Here's a bold statement that has been true in this market, and I'm sure in all markets. There are no good deals in a hot market. There are no good deals in an accelerating market. If a building is cheaper than a comparable building, there's a reason. If a condo is selling 10, 20, 30% less than the average condo in the city, there's a reason. I would rather that all of my buyers rent than buy in a building where their liabilities could be 10 to 30K of special assessments over the next 5 to 10 years. And on top of that, depreciation. All right, quick pause on this video. Listen, before I say anything, this isn't coming from me, this is coming from the entire team. We need more subs. A lot of our viewers are still not subscribed. So please like, share, and comment below on the type of content that you'd like to see next. These are a few of the other very important things that you need to consider when you're purchasing a condo in Calgary. If a condo has post-tension cables, some mortgage insurers won't insure it, so you're gonna need at least 20% down. A few years ago, these buildings were super tricky to sell, but in this market, less buyers care because there aren't many options. But that could change in the future. If you're buying a condo and your ability to afford it hinges on you doing a short-term rental like Airbnb or VRBO, don't buy it. I think that you should always run it off of long-term rental numbers because there have been a lot of bylaw changes from the city and from condo boards that have made changes to restrict short-term rentals. There have been a lot of recent cases in British Columbia where changes have come in and almost bankrupt owners after they scale their small short-term rental business and were forced to sell them. Condo fees 99% of the time only go one way, and that's up. You should be budgeting a 2 to 4% increase per year on your condo fees over time. So if your condo fees are $450 today, in 5 years, they're gonna be closer to $500, and that's if nothing goes wrong. Not only does this add to your costs, this also makes your condo harder to resell. There are currently 10 apartments listed for under $400,000 that have condo fees that are $900 or more per month. And almost all of them are on the market 3 times longer than the average condo listed in the same price point. Condo documents are also super critical. You should be looking at the financial statements, meeting minutes, and the reserve fund study. It's so easy to pick up on issues and complaints from current owners, and looking at the reserve fund study will tell you where the reserve fund should be and what expected items are coming up for repair. There are always outliers and things can break early, but do your proper due diligence so you can see what large expenditures are coming up. And if the numbers are way off, there might be a shortfall, and that will always lead to higher condo fees or potentially a special assessment. So what are we expecting condo prices to do? To continue to go up. As long as we continue to see population growth and higher rates, condo prices will continue to go up because they're the most affordable home type. And if you're looking to purchase a condo in Calgary, make sure that you're asking the right questions, that you know the financials and the history of that building to lower your exposure.